Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of finance and give you the inside scoop on what's really going on behind the numbers. Today we're diving into Angel Oak Mortgage REIT's July 2025 filing. Get ready because this report is basically a heads up that they're about to spill the beans on their second quarter financial results. Before we dig in, if you love getting clear, straightforward insights from dry corporate documents, make sure you subscribe. And hey, if you want to connect with other finance enthusiasts and talk shop, we've got a Discord community waiting for you in the description below. So what's the big deal here? Well, this is a pretty standard announcement saying, hey, mark July 22nd, 2025 on your calendar, because that's when Angel Oak Mortgage REIT, or AOMR as they're known in the business, is going to release their financial results for the second quarter of 2025. Think of it as them setting the stage before the main event. The filing itself is pretty brief. It's a Form 8K, which is essentially a report for current events that could be really important to investors. In this case, the really important event is just the announcement of when they're going to announce their earnings. It's like getting a save the date for a financial report card. Now, the date mentioned here, July 22nd, 2025, is the key date. This is the day the company is making this announcement and also the day they'll be talking about their performance for the 3 months ending in June. Now, let's talk about what they are actually trading. AOMR has common stock listed on the New York Stock Exchange. That's the everyday stock that people buy and sell. But they also have some serious debt like a lot of companies do. They've got these things called senior notes. Think of these as fancy loans that the company took out. Specifically, they have notes that are due in 2029 with a hefty interest rate of 9.5%. Investors who bought these are essentially lending money to AOMR and getting a good chunk of interest back. And if that wasn't enough, they also have another set of senior notes due a year later in 2030 with an even higher interest rate of 9.75%. These are important because they show how much debt the company is carrying and what kind of interest payments they have to make. These high interest rates can really impact their profits. These debt instruments are pretty significant. They're even listed on the New York Stock Exchange, which tells you they're a pretty substantial part of the company's financial structure. The main point of this filing is a Regulation FD disclosure. Regulation FD stands for Fair Disclosure. Basically, in the past, companies could sometimes accidentally or intentionally release important company news to just a few people. Regulation FD makes sure that when a company releases important company news to just a few people. Regulation FD makes sure that when a company releases material information, it's done in a way that everyone gets to know at the same time. So this filing is just their way of saying, hey, we're announcing the date of a webcasting conference call where we'll discuss our second quarter financial results. It's a formal heads up to the public that important financial news is coming. Attached to this report is the actual press release. While we don't have the content of that press release in this specific document, we know it contains the official announcement about the webcast and conference call. This is where they'll likely give us the real juicy financial details. This section just lists the exhibits that are part of the filing. So you have Exhibit 99.1, which is that press release we just talked about, and Exhibit 1, which is some kind of interactive data file, usually for making the report more accessible. And finally, down here, we see the signature. Brandon Filson, the Chief Financial Officer and Treasurer, has signed off on this report. This basically means he's confirming that the information is accurate to the best of his knowledge. So what's the story here? Angel Oak Mortgage REIT is essentially telling the market to tune in on July 22nd for their Q2 2025 earnings. This is a crucial time for any company, especially in the mortgage REIT sector, which can be very sensitive to interest rate changes and economic conditions. The fact that they're highlighting their debt with those high interest senior notes due in 2029 and 2030 tells us that managing their debt costs will be a major focus when they release their actual financial results. We need to watch those earnings reports closely to see how those interest expenses are impacting their bottom line and how they're managing their overall debt load in what might be a challenging economic environment. Investors will be looking for signs of strong cash flow to cover those interest payments and whether they can navigate with those high interest senior notes due in 2025 earnings. This is a crucial time for any company, especially in the mortgage REIT sector, which can be very sensitive to interest rate changes and economic environment. Investors will be looking for signs of strong cash flow to cover those interest payments and where they can navigate. Alright, that's the decode of this particular filing. It's a heads up for the real financial news, which is just around the corner. What are your thoughts on what we can expect from Angel Oak Mortgage REIT's upcoming earnings report? Let me know in the comments below. If you found this breakdown helpful, give this video a thumbs up. It really helps us out. And don't forget to subscribe so you don't miss our next deep dive. And remember to join our Discord community linked in the description for more insights and discussions. Thanks for watching, and we'll catch you in the next one.